Right, let's go. Let's just go through the main market internals. Let's have a look at this dollar, because this dollar is incredibly strong. So we saw a pullback on Friday, which saw some relief in the Dow index, but we've popped right back up. We've already broken last week's high. We had Fed Chairman Powell speaking a couple of hours ago, and no doubt he said interest rates are going to stay high for longer until inflation is stabilized, because that's his mantra for some time, and that has had an effect on the dollar, and it certainly had an effect on the indices. So we've seen this, we're under all the averages. If I put all the averages on there, you'll see that we are underneath them. There's the 50, there's the 200. So we're under all the main averages. So all the highs at the moment are selling. So unless this turns around soon, we can expect this to come into 32,800 at least. US jobs on Friday, but with that strong dollar, that's the main focus, the dollar at the moment. Volatility index, let's have a look. Yeah, so we are certainly raised. So volatility prevails. All right, let's start going through the main things. So the oil has long last pulled back. I talked about this pulling back last week. I thought it was going to drop from the 90 mark, but it actually went to 94, and here we are, just above 88.5. OPEC meets this week, but in the meantime, I will still be shorting highs in this oil, with the expectation that we can come down to at least 84, if not a lot lower. So we were just very extended, and from the average from the last 12 months, so we're just dropping back into that average at the moment. So gold, as we said, has suffered. We are trying to hold here. If we can turn around and hold 1850, then I think we can pull up, but the dollar is too much of a burden for it, and it is not able to pull itself up. So we could come all the way down to, we could come under 1800 at the moment. So we need to take a look at the miners. Any questions, just type in. If you want to talk about something, by all means, message me and I will unmute you. But in the meantime, I'll just go through all the markets, the main markets, and take it from there. So FTSE at long last has dropped. We saw all this resistance up here mid-September. And here we are, first trading day of October, and we finally cracked. Now we've cracked. I think only pullbacks are shortables. So 75.5, 7,550 is now shortable, and we could come easily all the way back to 7,200 or worse. I'm amazed we stayed up here so long anyway. I think the strong dollar's propped it up. The strong dollar does favour FTSE 100 stocks because they trade in the dollar. So weak pound, strong dollar does the FTSE a favour, which is why this one has taken so long to crack, I think, anyway. So let's look at the Nasdaq, because what the Nasdaq does, the rest of the market follows. So the Nasdaq is actually done okay. We've got this trend line coming across from June and the August lows. We came underneath it. At the moment, we're attempting to hold them, but we're above the 200 on this one. But you can see we've got a negative cross on the averages overhead. So if this does perk up and starts closing above 15k, then that could redeem the markets. Like I said, what the Nasdaq does, the rest of the markets tend to follow. So if the dollar does slacken off and this Nasdaq does sit up, that could see a reprieve overall. That weak oil, with the oil coming off the boil and struggling now, that could bring relief to the markets, because high dollar and high oil is a double whammy for the UK. So that, again, I'm amazed the FTSE stayed up for so long, given that we are a net importer of oil, and oil has been relatively expensive, much more expensive for us than it has been for the Americans. Right, so so the theme of at the moment for this week is, for me, selling any pullbacks in the FTSE and selling any highs in the oil. But I'm going to keep out of the way once we get to the second half of the week, when we get invents and OPEC. Right, a quick look at euro and pound, and then we'll move on. So strength in the dollar, this is the main component of the dollar basket anyway. So if we're closing down here nice and low, so any pullback to 105 is shortable, with a potential to go all the way back to 102.80 or more, now that we have seen what's going on with the dollar. And same could be said of the pound. All right, so that's short. So any move into 150 or higher, if you can, you never know, you may get some sort of pullback. If you see 123, that's definitely shortable. A reconnect to the 20-day average. In the meantime, keep shorting any short-term highs. But if that does rally into 123, that is still very much shortable, with a target of 120 or lower. Right, moving on. So let's just talk about another couple of other commodities, and then I will look at stocks. The corn, I've been talking about the corn for a while now. I really think this is I think this is definitely a buy pattern. Why can't I remember that box? Stupid thing. Okay. So we saw a series of lower highs here, and now we've got this bottoming pattern here. I think this is a three-way reversal for me. So I think I've been buying dips in the corn and the wheat anyway. Wheat has not gone well for me. I need to get rid of that box. Oh, I know. Okay. They've changed the layout. That's what's confusing me. Okay. I'm talking about Zoom here. Right. So I'm going to be adding to the corn here. Let's have a look at the other ones. Let's have a look at the wheat and copper, and then I'll move on. So wheat has really broken and dropped harder. Oh, this tool's really annoying me. Right. This is not unusual in commodities. I tend to find they can be looking as if they're going to reverse, close higher, and then break support. You know what? This is actually very bullish for commodities. If we at any stage in the near future, if we close above $6, then these drops are done. Obviously, if we stay down here, then we could see some lower numbers and potentially coming to $5. But it's not unusual for commodities to break key levels of support, flush out the weak hands, and then drive it back up again. Silver does this. The metals do this a lot, as do all of the commodities. So I'm still a fan of the wheat, despite that drop down there, but it has got to close above $6 quickly. Right, copper's the new oil. Right, I have started to buy up here at 81. I'm going to have to be careful here because that is not. I've jumped in after that decent close back in the last week, and I'm now underwater. So if we close under 78, then this could be off. But at the moment, all we've done is fallen right back into support. But continue to close lower, and obviously I've got to bail out and rethink. So at the moment, my stop is under 79. I will add if that closes back above 82.5. Otherwise, be careful. Right, let's look at the miners, given what we've talked about with the dollar. So Pan-African had a really nice move into 16.5, and here we are at 13.5. So we fell right into this, we pulled back into this drop zone from the 26th of May and failed. So this was good on up from the pull up in May and August, sorry, June and August. But the highs have failed to hold. So if we can close under 13, then I would jump ship. If we turn around and start closing above 14, then that could be on to a winner. But in the meantime, that is, I mean, gold is an interesting pivot point here, but it's not putting a reversal on the daily chart, certainly not on the weekly chart. So all-time gold is lower. This one is under pressure. Hochschild, same thing. We've got a potential head and shoulders short up here. I do hate it when they change these tools. Oh, here we go. Right, so we've got a shoulder, a head, a shoulder. We've broken through the neckline support by coming in under, by closing under 84, and certainly closing lower today. So at the moment, unless this turns around on the 75 mark, close under 75, then don't touch it short to medium term. At the moment, it looks as if that 70, looks to me as if it wants to touch 75 at least, and may even come down as far as 70. So miners are really struggling here unless they turn around here and start closing above. For this one, it's got to close above 83, 84. To prove itself. But in the meantime, that is, you can see the volumes. It's we had a decent move into Friday, but we couldn't close above that 20-day average. Any market that can't close above the 20-day average, always be doubly cautious. I love the 20-day average. If you look at these markets with just the 20-day average on it, so at the moment we're tucked between the 20 and the 200. But you can see every time we hold the 20-day average up here in July, late July, we move up into beginning of September. And then, so we've got underneath the 20 on the 6th September, poked above it and immediately closed lower on the 21st, or say immediately, we closed lower on the 21st. And here we are on that. We've got no follow through on the move on Friday. So be very cautious on the miners because they are struggling. In the meantime, the other commodity, let's stick with the commodity theme at the moment. Let's look at things like Elementis, which are chemicals, holding up. I think any pullback into 110, 115 is viable on that one. So if we pull back into this 20th September range, I think that is viable, and that's typical. See a big move where a lot of traders have missed out. The market will normally pull back into that range. So don't be put off if that one goes back to 110, because that's a potential buy signal, as long as it holds 110, of course. TPI cap, commodity brokers, no, struggling. Man group is holding up. If man group comes down to 210 and holds, that I think that is a buy. Glencore, that's a buy at 440. Rio, that's had a nice move off of this 45 into 53. Again, we had a big move on the 14th of September, so another retest of 50. And that's holds. I think that's buyable. Right. Anybody want me to look at any particular stocks? Because I'm just going to zip through a few more and then finish up. So you can see why the FTSE is struggling. We've got Lloyd's pulling back, but only into the 20-day average. So I would have thought they would want to come and see at least 42 again. Barclays, where are you? Here we go. Barclays looks lower. It's really struggling with this 160. But you might see that pulling back into 148. Direct line, that looks lower. AJ Bell. This is AJ Bell is very interesting. Keep an eye on this 250, 260. That not so long ago, that was nearly £4. It's a good solid stock, but is seeing as just not, the volume is terrible. Volume is diabolical, so don't jump in anytime soon. Ashmore, right. Let's have a quick look at Pro, and then I'll look at Ashmore. Right. Yeah, look at this. I was hoping that was going to hold. That's coming down on volume. That's Prudential. Yeah, what's interesting here is the volume is better down here. There is a lot of support down here. Right, from a pure technical point of view, this has got to close above 190. So I think it's worth waiting. If you're in this, keep your stop away under 184, possibly even lower if you really want to stay in this. 178 if you're determined to stay in it. But if this goes over 190, this closes above 190, then on volume, then that's a potential recovery into these highs at 280. That's a good one. Let's look at a couple of retailers. Just to get a feel for what the market is doing. Yeah. See, again, head and shoulders, top of the shoulder was 280, and here we are under 250. So next stop, 240 on that one, potentially, unless that turns around quickly. You can see how they just hung. It's at a lower high at 270. This is Tesco, lower high at 275. So this is a warning sign that retailers are struggling. EasyJet, very little, there's a lot of red on these charts. EasyJet is faring better. I'm not a fan of anything to do with retail and travel at the moment. That's Chewy. That looks horrible. So there's warning signs out there. Let's look at Primark. Sitting up, but struggling. And look at the volume, to me suggests that's lower. I don't think that's going to stay up there. Right, anybody else want me to look at anything else? I'm just going to look at some pharmaceuticals. Right, let's look at your AV and Algen. Okay. Just want to look at BMY. Yuck. Going down on volume. GSK had a really nice move. So this is, it's got a higher high. It's a series of higher lows before we broke up from a lower 1292 into 1550. If this, I wouldn't be surprised. It might come down to 1410. If it's very bullish, it's got to sit on this 1470 and not close under 1470. So at the moment, that is still in bull territory, but just be careful if you're in that. Medtronic. Keep an eye on that on Medtronic. Right, let's look at AV. Let's go to my financial list. Algen. Let's do Algen first. Well, volume and the price alone on this chart suggests, so I've just filled a gap, haven't we? We've just backfilled this gap. We gapped up on the 11th of September. We just filled that. I would not at this stage. I would not touch it. If you're looking to buy, I would sit tight, because we might come all the way back down to that £2, 210 again. If we turn around and close above 220 sometime soon, then yes, it's buyable if you've got the volume. At the moment, I would suggest that could wander all the way back down to £2, but possibly even lower. It's the lower highs that I'm concerned about. Ever since November last year, with one exception in March this year, we've seen lower highs. So I think that's a watch, but not a buy personally. AV, I've not, for some reason that's not on my list. That should be. I will add it. So let's just. Same pattern. We're seeing a lot of this pattern with big moves at some time in September, and they're just coming back on themselves. I wouldn't be surprised to see that all the way down at 375. We're not far off 375 now anyway. But that's been sold. There's a key area of resistance up there at £4. We went to 404 and then turned around. So I think we need to get at least this week out of the way. The volatility in this time of the year normally goes into October. Bear in mind, we've only just obviously just touched the first trading day in October. If this market's going to, I mean, last year, let's go back to the indices a moment. last year, we drifted down. It started turning around the first week in October, but we didn't do a complete turnaround till the middle of October. I think that I can see us coming to 32,800 on this Dow, because that's where we launched up from in June. So I think there's still some downside. If I'm right and we don't hold 32,800, then expect this to really see quite a sharp drop, a decent correction. So I think we need to be very cautious in this early stage of October and see if these markets begin to hold as we get deeper into autumn and kick off into winter. All right, any other stocks you want me to look at? Let me just see anything I want to go through. So if you look at housing, that's Taylor Woodrow. That's, that's holding up reasonably well. Developments, yeah, coming down on volume. So I think if the market is going to have problems, if the consumer is going to have problems, I think housing is a key indicator. So if these housing stocks, this is Persimmon, if that comes down to 10 and doesn't hold, that's lower. Now this is a good dividend payer. This is not finding support. So be careful. All right. Well, thanks a lot for your company. Thank you for joining me, and I will send you a recording. I'll send it out to the London Financial Group as well as the Telegram group. All right. So obviously it's only the first day of the week. We've got non-farm payroll at the end of the week, but overall there's a lot of downward pressure at the moment. All right. Thanks very much, and see you again. Cheers.